Hey everybody, Courtney Smith here, and I want to talk about the coming mass killing of zombies. Exactly right. So we're in the middle of a slow motion debt crisis. We lurch from one crisis to the next, and we are far from over for this particular debt crisis. In fact, we're a long way from the worst of the problem and the end of the rolling crises. The 2008 debt crisis was caused by poor government banking and accounting policies added to a too easy Fed policy. Those policies induced consumers in the US and Europe and other countries to take on way too much debt to buy houses. Now, those poor policies created a massive debt bubble as these consumers borrowed trillions of dollars to buy houses. But when the Fed raised interest rates and certain accounting standards were changed, the debt bubble burst and led to the Great Recession, the worst recession since the Great Depression. Then the federal government raised taxes in the middle of this Great Recession and created the slowest recovery from a recession in US history. But consumers retrenched. They paid off trillions of dollars of debt, or unfortunately were foreclosed on, so their debt burdens have become dramatically reduced. But companies and governments have taken their place. I'll talk about government debt in the future, but want to concentrate on corporate debt in this video. The chart shows what percent of the Russell 2000 companies are zombies. A zombie company is defined as a company that is not making enough money to pay either interest nor principal on their debt. They are technically bankrupt, but haven't yet been forced to declare bankruptcy. That is the definition of a debt crisis. Now you can see that the number of zombies is moving swiftly higher and now represents 24% of the Russell 2000. That's about 500 companies in the index, and the chart is months old. So it is likely that the situation is much worse as the Fed continues to raise interest rates, bank lending standards are tightened, and the economy slows. All of these factors increase the number of zombies. So what's going to happen? Well, the confluence of Fed tightening and slower economy will increase the number of zombies. We're already at a crisis point, just waiting for the trigger event to cause this zombie house of cards to crumble. Typically, the trigger event is that interest rates get high enough and banks don't roll over loans due to tightening lending standards. So one weak zombie is killed, and then it spreads into a panic of selling of those zombie stocks. We haven't yet seen that, though the bank crisis this year is a form of a zombie debt crisis, but centered in just a few banks. A banking crisis can be contained easier than a zombie corporate crisis because the Fed can just hand over money to banks, but it is harder to do that with corporations, particularly small companies, which is what was in the chart. So we know what the trigger event will be, but we don't know when interest rates or lending standards will reach the tipping point. My suspicion is that Fed funds at 6% would probably do it. So the question really is, will there be a zombie debt crisis? There's no question there will be a zombie debt crisis. So how do we make money? The first way is to short stocks with zombie balance sheets. Now, it's too early to do that now, but you should be assembling your watch list of stocks to short. And so you look for stocks that are not making enough money for their interest payments or principal payments. So weak balance sheets is what you're looking for. Now, I personally don't really look at balance sheets very much, except when we go into a debt crisis. And then I become laser focused on the balance sheet. Normally, I'm just looking at earnings in a normal market. But in a debt crisis, you have to shift your focus over and look at the balance sheet and focus on those that have weak balance sheets, liabilities larger than their assets. They have very poor cash flow, maybe negative cash flow. Those are the types of things that you're looking for. Now, another possible strategy is to buy puts on those stocks, because then we don't have to time things as well. So you might have to buy 1 year out, 2 year out options on these things. Now, I think that this zombie crisis will be big enough to affect the whole stock market and corporate bond markets as well. Now, of course, the best way you can follow my trades is to sign up for my Stock Navigator, so check the link below. All right, everybody, we'll talk to you later. Let's go kill us some zombies right now.